keep being positive, surround yourself with people, and most importantly, believe in yourself.
Have you been thinking about buying your first rental property for some time, or do you already own a bunch of properties? Well, fellow investors, you found the right location to listen and learn from others' successes. Welcome to The Very Real Estate Effect with your host, Axel Mont-Saint-Jean.
Hello, and welcome back to the Very Real Estate Effect podcast, a show dedicated to real estate investing. Today, I want to take a bit of time to share with you some of the changes I've been seeing on the market, because over the last couple of months, it's really evolved. And sometimes I wonder if we're not at an inflection point in Quebec when it comes to the real estate industry. Like, absorption is slowing. Right now we have a strike of construction workers. Some developers are kind of putting some project on pause for various reasons. There's uncertainty when it comes to the economics of the nation and what's going to be happening with interest rates and the relationship with our neighbor down south. City approvals and regulation have been taking it more and more time. So today I want to take a little bit of time to unpack some of that, see what's happening, share some of the vision and what could be done about it. So first of all, the Bank of Canada right now is a bit in a hot seat in terms of the interest rates. There's been some pressure on inflation. They have to follow inflation because interest rate is the price of money. If the price of everything else increases, well, mechanically the price of money has to increase as well. Otherwise, we could get into a problematic situation for the macroeconomic environment. Now, what that also means is that the pressure down south with the U.S., the massive uncertainty with Trump's tariffs, the Bank of Canada is going to have to make some choices. Now, the more uncertainty, the more difficult the choice. Wanting to be conservative, that also means sometimes just raising interest rates. That means more difficult to get financing, more difficult for debt servicing ratios, and that's when the institutional funding also tightens, and that leads to a lot of investors, just start, wait and see. And I've had a lot of them on the phone recently that have said, like, I'd like to invest, I have some capital, but I want to see what's going to be happening. It's already been like that for a while. A lot of them have lifted their foot up. So we have to look at where we're at in the rate cycle. I mean, we know that 2 years ago, it was the fastest increase the country's ever seen. Now it's decreased quite fast as well. And now, since the beginning of the year and basically Trump got in, we've got to see what's going to be happening, because it seems like his strategy is about keeping a lot of doubt and keeping people in check and keeping the leverage of the negotiation that way. I don't think he's really got a strategy, but that's just the way he's been going about it. I'm not going to get into the politics of it because it's not a good idea right now. So the macroeconomic is very important. Now, we've also seen a decrease in demand. Absorption is getting more and more difficult. You put out some apartments and then some of them don't rent, or they take longer, and you actually have to give incentives like, a free month, free television, depending on what is it that you want to do. And the days of renovate and just put something out on the market, and that Saturday you had 20 people lining up for visit, those days are kind of over. Obviously, it depends on where you live and where your properties are at, but you have to be more mindful, and you have to be a lot more targeted about what kind of renovations you do, how you're going to manage your budget, who's your ideal client, what does your location mean in terms of tenant profile, who's your clientele, and so on and so forth. Now, absorption, you have to be really mindful of this right now. It's there are vacancies. There's vacancies in the $1,500 apartments and above. There's less vacancy on the lower end of the spectrum, like the $1,200 apartments and less. I think there's very little vacancy on the $800 apartments because there's basically none left to rent. But you have to be mindful of that, because for any landlord, investor, owner, the minute you renovate, like, you increase your costs. Usually you have to, raise rents a little bit. Now, right now there's also a strike of construction workers, and I'm not as familiar with the file as some others would be, especially in the unions, but I saw that they're asking for basically 25% pay increase over a 4-year period. If this goes through, just think of what that's going to do to the cost of construction strictly from a labor point of view. I mean, it's tremendous. Now, obviously, if it was to go through, not all that 25% is going to increase in the pockets of the actual workers, because there's a lot of agents in between that also pad their paychecks. But once again, it's just something that creates uncertainty. Now, another aspect of that uncertainty, and I've talked about this tremendous since a few years, is the uncertainty with cities, and the time it takes to go through approval, to get social acceptance. You want to develop a project, and all of a sudden you have the entire neighborhood that goes to City Hall and says, we don't want it in our backyard. And often the City Hall bows to that pressure, even though everybody says we need more housing. And the neighborhood says, yes, but just not in my backyard. I don't want to see it from my pool, or it's going to give shade to my pool, so I don't want this. So some 200 project units get canceled because of, 20 people in the neighborhood complain. And there was an example of that in l'Île des Sœurs recently. I think it was a project by Groupe Mac. There was 26 signatures that ended up at the city, and the city put it on pause, and then they finally still accepted the project, saying, look, we can't let 26 bystanders or inhabitants of the neighborhood stall a project like that that's going to create commercial space, residential space, and create a lot of taxes for the city. So social acceptance is really important, and all the risks that come with the city. Like I've also shared, the amount it takes to get just a building permit. That's a huge risk. And during that time, you keep paying, you keep supporting the property, and yet you're not even sure of the outcome with the city. So far, the macroeconomic environment, the demand changes, absorption, the risks related to cities, the construction strike, it's starting to be a lot. Now, I don't want to be pessimistic, and if you've been listening to this podcast for any time whatsoever, you know that I'm a very optimistic person, and that I keep saying and thinking, and I mean it. It's not just think and say that things will get better. That sometimes it gets a bit more difficult, but it pushes us to retrench, to do more research, to get better at what we do, and to sharpen our blade. And so this is exactly what we have to do. So with all those changes, you have to get better at it. And you also have to talk to a lot of people. And that's one thing I also wanted to share with you. Is I've mentioned Cercle Tres. It's a community that I've joined recently of professionals in commercial real estate. And I am so happy to be part of that group and to be sitting at that table, because it regroups developers, owners, managers, big decision makers, and also plenty of other professionals from the industry, whether in financing, in environmental services, and all sorts of disciplines that you need in real estate development, construction, and real estate investing. Cercle Tres is an organization that works on membership. There's usually about 4 to 5 events a year, and I'm very happy to make an effort to go to all those events, because in times of uncertainty, you need to be able to count on a crowd. You need to be able to ask questions to other individuals who are doing the same thing and seeing how are you going through it? What are you doing? And so it's been part of the mission of Cercle Tres to regroup professionals from the commercial real estate industry and get them to benefit from the conversations, and to build that community, because we can all help each other. There's actually an event coming up pretty soon. It's for members only. And so if you're interested in becoming a member, let me know, reach out. You can also go to the website cercle13.com and find some information there. And for me, in those uncertain times, it's been a great support to be able to talk to other professionals who are facing the same situation. Now, when it comes to developers, right now I kind of see both. I see some that are plowing ahead, and I see some that are kind of slowing down. And it's not that they're slowing down because they want to. In any case, even those who are continuing, it takes time to get approvals. So they're continuing, but they have to be strategic on the financing and on the sequence of events. Like, when is it a good time to push and rush to get all the approvals? Once we have the approvals, we might wait 6 months before we launch, because launching the construction means having the financing and want to get the most favorable conditions. And also know that once we finish and build, we're going to be able to rent and stabilize the property. And by stabilizing, I mean rent it all, get the property to produce its maximum amount of revenue, and put a lot of units out there for the community. So I don't have a crystal ball when it comes to what's going to happen. Now, I can only help you with, given the current environment and some of the elements that I've shared, how can you be best prepared? And best prepared, as I've said since the beginning, is surround yourself with people who are doing the same thing, or with people that are just further down the development pipeline. And when I say development, I don't mean real estate development. I mean personal growth and development. So if right now you're doing triplex and sixplexes, go hang out with people who do like 12, 15 units and above, because not only does it pull you up, you benefit from those conversations and you will learn. Number 2, keep educating yourself. Read books, listen to podcasts, get some good information about what's happening in your market. You may be in Montreal, you may be outside of Montreal, you may not even be in Canada. I don't know. And that's applicable to everywhere. Research your local market where you're investing. Okay. Keep educating yourself. There's so much information out there. And sometimes that's actually the trouble, because there's so much you don't know what to listen to, but you have to listen to credible people who have been doing it themselves, because usually they're pretty transparent and they'll share some of their mistakes, so you don't make that mistake too. You can learn from their mistakes. Keep going at it. Keep being positive. Surround yourself with people, and most importantly, believe in yourself. And maybe now is a time for you to pause, to stabilize the rest of your portfolio, see what else you've been doing, and talk to other people who have the same issue, because you're not alone. We're all doing it together. That's what I like about Cercle Tres, is that I get to go over there and ask the questions to other people who are doing it. And a lot of them are a lot more advanced. I mean, I'm talking to developers who are doing hundreds of units a year. It's very, very interesting. And out of every conversation, I learn something. So this episode isn't a downer. It's just a bit of a reality check on what's happening. And at the same time, the market is really hot. We've recently put a 5-plex for sale. We got 3 offers in 3 days. We're under contract. We're most likely going to be closing just by the end of the month, 2-3 weeks from now. And it's actually gone very well. So there is demand. The market is hot. It's just it depends in different asset class. So, the 1 to 4 or 5 units, there's a lot of demand. After that, there is a lot of demand too. It's just that you're in competition with a different type of buyer, different type of clientele, and you need to be mindful of that. So there is no better time to buy than now. I keep saying it. I believed it. The best time, as Warren Buffett said, the best time to invest was 15 years ago. The second best time is now. So keep going at it, invest in yourself, and make some of those smart decisions and acquire. On this wonderful note, thank you for getting to the end of this episode. If you have any questions about any of the points that I mentioned, please reach out to me on Instagram, on LinkedIn. You can do so. My contact information is also in the show notes. I'll be happy to have a conversation with you about all this. As you know, I'm very passionate about this. There's been some ups, there's been some downs, but one of the things that keeps me going, even with this podcast, is you guys, because I share a lot and I get some good feedback. And you know what? At the end of the day, with all those projects, I know I will succeed, because I already have. On this wonderful note, you keep going. Let that be an inspiration. Thank you, and I'll talk to you next week. Goodbye.